I think in the short term, for the next 6 months, is to see the completion of the work that we started, to fix and optimize our existing business for the 18-month period that we've identified that ends in September. And that will see a capital release from our Spanish business. The next 18 months will see us focusing more on the growth side, starting firstly with the capital coming out of Spain. And we're looking at investing that more in the emerging market, contiguous areas. And in terms of new businesses, we'll focus more on the areas where there's distribution capabilities that we could invest anything from 4 to 6 billion over the next 18 months.
Mm-hmm. And what do you foresee the challenges being in the period ahead, and how will you mitigate against them?
I think if you look at the sanctions on Russia, that for me, particularly post-September, remains a concern. If Putin decides to also be punitive, and in terms of introducing legislation that could affect us if we refuse to supply their customers, that could be very negative for our business. And I can hope that we are able to find a common ground between the United States and Russia, that would augur well for our business. That is more on the operational side. I think as one is scouring for opportunities in terms of assets, pricing becomes an issue. You see with the Ramaphoria, a lot of people are quite buoyant, and there's, the price expectation is not realistic. Therefore, it will mean for us, rather we focus on capital reduction and returning the money to the shareholders if we're not able to find something appropriate in the next 18 months.
And how are you feeling about the mining space locally? The Mining Charter 3 is still quite contentious. We still don't have a way forward there, but the new Mines Minister is very confident that we'll have finality soon.
I think if I compare to the previous leadership and the current leadership, I'm actually very optimistic that even having Gwede Mantashe as the Minister of Mines, he's very pragmatic. Yes, there'll be hard negotiations, but I think there will be a positive solution that will be a win-win, both in terms of the country as well as the mining companies. You've seen mining companies actually investing in brownfield. What we need to see is new projects that are also going to create new opportunities and seize the opportunities that are presented by the price improvement in commodities.
And the car market, so it was quite a difficult space for you in this period. What are we seeing in future? What are we expecting?
Short term, I think the luxury market will remain constrained. But if you look at the economic market where the likes of VW and Toyota, we've done well in that area. And I think that industry is driven by consumer confidence. We need to see jobs created. We need to see stability in terms of the current government. And I think over time, it will improve. But I'm not really bullish in terms of our automotive business. I'm not going to see double digit. And hence my drive to reduce the invested capital in that area and deploy it elsewhere. That's really the focus for me in the automotive business.
And debt creeping up quite a bit in this period. What debt levels is Barloworld comfortable with, and how soon before we see it come down?
I think it's the pattern, year on year. You see the first half, because our business is very working capital intensive, both automotive, specifically rent-a-car and fleet, as well as our equipment business. So the second half, that's when we release the capital. I'm very comfortable that even with the money coming out from Spain, you'll see come September, we'll be sitting at low levels of debt. But that, for me, I'm saying we need to look at a long-term situation where we change the mix of our capital structure, particularly in ensuring that we reduce our exposure to working capital-intensive businesses, and hence my drive to reduce the invested capital in ensuring that we can deploy it in cash-generative business. And I think that's what we're looking for in the next 18 months to 24 months.
But generally, can I sum up to say that you're feeling a lot more optimistic about the period ahead, in South Africa, particularly under the new leadership?
Certainly, I do. I think Ramaphosa understands basically the needs of business, but also understands the challenges that he faces in the country. So there's got to be a balance. So I'm much more optimistic than I was last year. Just
talk to me about the plans and the outlook for the rest of Africa operations.
When you look at Angola, Angola is largely driven by the crude oil price. And at the current levels of $80 per barrel and improving, we are likely to see money circulating back into Angola, which will enable companies like ourselves to be able to take our money out. We've basically trapped 850 million rand in that market just through bonds that are invested there. That will improve. I mean, the DRC remains volatile. I think politically it remains an issue. We are on standby, but fortunately where we operate, is reasonable. And Mozambique also will depend on gas prices, but Mozambique is depressed at the moment. If not for coal, we will have a tough time in Mozambique. But the balance of the business in the rest of Africa looks very good.